stock records. We are on stock records. It's nice. Stock records, stock records is about cost of sales, where sometimes you know that it's opening stock, add back purchases, carriage on purchases, custom duties, less closing stock. That is the full blown of it. Formal, know your format if it has to be full blown. But now, in this instance, we are given the stock records. The business sells sports shirts. The weighted average method is used to value the shirts. Weighted average method is used. The following information was extracted from the records. Stock balance at the beginning of the year, purchases during the year, stock available for sale. And they put these question marks now, and it becomes difficult for the student. It becomes foreign now, just for the fact that they put it a question mark. And sometimes you just have to use literature, you just have to use mathematics, you just have to use tactics, you just have to use common sense to come up at the conclusion to say, what is really happening here? Is it about the format? Yes, it's about the format. Let's look at the format in terms of trying to answer this question, where I said on sheet 1, I will also rename it calculations. Let's put it like that. Let's say calculations. Okay, and then we have this stock as the calculation number 1, where you have opening stock, you have purchases. In this case, they don't speak of carriage on purchases and other stuff, and then you have less closing stock. And they said the value does not include the value of the stock that was damaged. Let's put it like that, damaged stock. Or if you like, can say stock loss. Or if you like, you can say trading stock deficit. Now, you look at the opening stock quickly. You don't waste time now. Opening stock, units, price, 1254 million. 1254 million. There was purchases made during the year, 5325 million. 5325 million. Is that so? And they say total available for sale, which is what I like here. Let's just put in a column and add them together, and that is what is total available for sale, just for the sake of completeness. But let's not put it like that. Let's do it like the way you understand it. Let me close this column. Let's not waste time. This is exam. And then less closing stock. You look at now the closing stock, they gave you units 1185. Multiplied by let's look at the sales. Units sold is 7750 multiplied by. They are using the weighted average. Weighted average. Now, weighted average, it simply means that they are looking at what they had, the stock of 1,900 units at a unit price of 660, and then they bought 7,100 units at a price of 750. how do they sell these units? What do they use to sell these units? Say, okay, we have 9,000 available for sale, and the total of that is 6579 million. 6579 million divide by 9,000, and then we're gonna sell this for, that is why I said to you, some instances I'll be using a calculator. Also use your calculator to get this amount. 6579 million, 6579 million, is that so? Divide by 9,000 is equals to 731. They're gonna sell it for 7. Their unit price will be 731. Now the value of closing stock 731. Easy. Now you're answering those question marks. 731. Easy. Now the value of closing stock. Calculator. 731 multiplied by 1185 is equals to 866235. 866235. Is that so? Now we have sales. How much were the sales? 7750 multiplied by 731. 5665 250. 5665 250. 5,665,250. And then now, did you have your answer here? You have your answer here. What is the value of the damaged inventory? What is the value of, because you have the sales now, you have this, you have that, and I will put the opening stock plus purchases less closing opening stock plus purchases less closing stock less the sales, which is equals to 47,515. This is the cost of the damaged inventory. This is the cost of the damaged inventory. So on your answer sheet, this is what they expect to get. This is your clear 5 marks. I hope you understand. And now is a trading stock deficit. You go now to your statement of comprehensive income, and you have operating expenses there. Now, before you record anything, because now you already identified a new expense that forms part of operating expenses, and you look at the given answer sheet. Let's look at the given answer sheet. Let's look at the given answer sheet and see how they recorded operating expenses. They said, okay, directors' fees. Let's put those directors' fees. Directors' fees. And then they put it again, audit fees. Audit fees. We pay audit fees for one reason, because those are the guys that express the opinion on the financial statements as to whether or not they fairly present the operations of this. So we rely on them, and then we pay those audit fees. And directors' fees is given as, let's not look at this because I wanted the formality, and then they gave you now nothing until they gave you sundry expenses. They gave you nothing. So even if we don't look at the amounts here, we can just go straight to our question paper. And look at the amounts, which they speak of directors' fees, 1124 million. 1124 million. And then we have audit fees. Audit fees 83,000. And then we have what we just got now, trading stock deficit. How much was that trading stock deficit? You refer to your calculation, 47,515. 47,515. You carry on now. You look at the next adjustment. You look at the next adjustment. Fixed assets. And remember, on that given answer sheet, there is the open space where they say calculate profit on sale of delivery vehicle. So we are now answering this question 2. Let's quickly answer this question 2. Fixed assets, land and buildings, vehicles, question mark. I said to you, when you see question mark, be happy. You know, equipment 2022, they gave you the amount. 2021, question mark. Accum deep, vice versa, question mark. Vehicles are depreciated at 20% per annum on diminished balance. Equipment is calculated at 15% on cost. Remember, I'm facilitating. I don't have time to show you a diminished balance method. How is it done? You've done that at school. You've done that at the class. You've been struggling very hard to understand that. Now is time for me to show you the application. Let me show you when we facilitate it. We're not going to be talking about diminished balance method or what. We just quick. We're moving. I'm of the view that you understand your study material. Should you have any problems, or if I'm quick enough, this is, comment below, and maybe you can attach your own question where you don't understand anything. I will attempt to answer it for you. Suggested solution, you understand most. So let's look at the bookkeeper calculated the total depreciation at 328,200 before taking the following into account. An old vehicle with a carrying amount of 170,000 on 1 March 2021 was sold for 140,000 on 1 December 2021. This vehicle with a carrying amount of 170,000. Let's go back to calculation number 2. We calculate what? Profit or loss. Profit or loss on sale of delivery vehicle. Let's make it more uniform, more formal. Let's make it more uniform and more formal so that it looks professional, just like yourself. You know, it must look professional. Remember, we're accountants here, so we must look professional. Okay. You just have to play around here and understand your work, you know. But if you find any difficulty, I will show you another method that you can do this. Now let's look at sale on delivery vehicle. We have, and I would like also to do what we call, let me rename this and say general ledger. You know, some of the students would like to see these things on general ledger, such that, let me be quick and do that trading stock. Because some students will say, but this method is more confusing. I'm used to general ledger accounts. Even though we are used to general ledger accounts, there are other methods that we can show you where we say to you 2021 March the 1st balance, which is the opening balance. And let me increase the font, because you know there are those students who will say, yeah, I didn't see because the font was too small. So let's rather avoid that. And then balance, we have balance that was brought down. Obviously it will be the certain amount. And then 2022 Feb 28, we have sales. That's so. And then we have balance, which is the closing balance. And then here 2022 Feb 28 is for the sake of completeness and is for the sake of yourself understanding. You know it's exam, so you want to be quick. They didn't ask you the T account, however I'm just showing you so that you understand how these things are done. And then we have purchases, and let me make it look professional like you. Let's format this. Let me format this together with you. Alignment, let's alignment and wrap it. Okay, let's put it on the middle. Let's make it bold. Let's put lines so that it looks like the answer sheet, you know, of your exam. And let's put more borders. Let's put lines. Let's close it. Let's do this, put the top line and put the double line, more borders. Want this double line, put this double line, more borders, double line here. Yes, 100%. Now we have this, we have that, simple. And they said the value of was not inclusive. Damaged inventory was not part of this closing balance, you know. So obviously we're gonna have here trading stock deficit. So you understand that. Let's now we transfer those amounts that we had. 1254 million, 1254 million. You had those purchases, 5325 million, 5325 million. And then you had those sales. Sometimes you just have to show on the bracket that it was 7750 multiplied by 731, if I'm not mistaken. Let's check. 7750 is 5665250. 5665250. And then there was closing balance, which is 1185, 1185, 1185. 1185 multiplied by 731. You did make those calculations, so you look at those calculations and then you said it was 866235. 866235. And then you had to close off the accounts, the debit and the credit side. If you close off the accounts, you check which side is bigger, and then the bigger side is this one, which is equal to this plus that, which is equals to 6579 million. And then the trading stock deficit, it becomes very simple, because now is the difference of this total, and then this total you must minus this, you must minus that, and then you find that this is the trading stock deficit. And then now we're looking at the asset disposal, because this guy is also disposed of the asset. It's the same procedure. Format cells. Let's align it. Simple. I don't know why you want to make it to look like a problem, whereas it is very, very simple and very, very nice. Okay, asset disposal. We have 2022, February 28, because now we do this once. We have that vehicle which was disposed of. The vehicle which was disposed of 2022 Feb 28. We have accumulated depreciation on this vehicle. And let's make it look professional, like yourself. Put those borders, and put those lines so that it looks smart, like you. So put those lines so that it's uniform, it's perfect, it's professional. It doesn't pose questions to say, why yours it doesn't have 2 lines there. Let us not be silly and let us not ask silly questions. Let's concentrate on formal etiquette of this so that you understand. Look now, it is what you want to see. Now, the vehicle, we look at that vehicle. An old vehicle with a carrying amount of 170,000 was disposed of on 1 March, was sold for 140,000. Please, let's say they got this to the bank, 140,000. And the accumulated depreciation on this vehicle sold, we can just show the calculation here and say 170,000 multiplied by 20%, multiplied by, we look at when was it sold, from March to December. March, April, May, June, July, August, September, October, November. It's 9 months. We don't include December because it was the first. 9 divided by 12. And then we calculate that to check how much. We use the calculator. Use your calculator as well, so that 170,000 times 20% times 9 months divided by 12. This must be excluded, 25,500. Now, if the bigger side is on the credit, it's the profit. If the bigger side is on the day, let's look at let's close off the account and check which side is bigger, so that we determine if there is profit or loss. And if the bigger side is this, if we add on the debit, which side is bigger here, so that we see if we have profit or loss. 170,000, I think 170,000 is the bigger side. And then we look at 170,000. Correct me if I'm wrong. And this is equals to this 170,000 minus this first one minus this amount which they